it's more bad news for mortgage holders. Unfortunately, rates are going up again. We're seeing this with a ton of lenders at the moment. They've been increasing their rates. We're going to talk in this video about why they're doing that, who's doing that, and what should you do to protect yourself in this scenario. It's a very important video. While you're here, if you haven't done, subscribe and hit the bell notification. Smash the like button or tickle the like button. That really helps us with the YouTube algorithm. And share this with someone. I'm sure you know someone right now that's remortgaging or thinking about remortgaging this year that's a little stressed out about where interest rates are going to be. So this video will help them. So do share that. There's a share button below there as well. So what is going on? Well, inflation is really stubborn. And so a lot of people are getting really frustrated that inflation just isn't dropping as fast as it should be. Now, I believe that the Bank of England, I've done a video on this, should be bringing rates down. A lot of economists are saying that they should be bringing rates down because they're causing more pain for people. And so as inflation does go down, so let's just say their rate is here, 5.25, that's the base rate, and inflation is dropping down at the moment, the pain is the gap, right? So the smaller the gap, the less pain. So let's just say you have a 5.25 base rate and you've got a 4% mortgage rate that you, 4% inflation, 4% inflation, and this is like 2.5% inflation. Then if you leave that rate high, if you're at 4% inflation, the damage to people isn't so bad. But as inflation's going down, it's getting more stressful for people and it's getting tougher as that gap widens. So as inflation is dropping, it's getting more painful for a lot of people. Now, ironically, one of the big things in inflation is housing costs. Now, housing costs have increased because interest rates are so high. So landlords have had their rates put up significantly. They've had to pass that on to tenants, and that's increased the rent. By increasing the rent, you've increased the rental inflation. That's in the figures, and that's one of the costs that the Bank of England is looking for it to go down. That's a difficult scenario there, isn't it? And so that is a difficult situation that we're in at the moment, where inflation is still too high. The interest rates are too high as well. And so because of this uncertainty, banks borrow on something called a swap rate. They borrow from a bigger bank, right? And so they borrow from this bigger bank. And as the outlook was looking better in December and January, rates dropped. Their rates, the rates that they got, they passed it on to us because they were getting less business and they got competitive and were fighting over business. Now their rates are going back up. Our rates, as in the base rate, is sticking the same, but the rate that they borrow at is increasing, so they're passing those costs on to us. And so the buy-to-let market, I had a mortgage rate that I achieved, fortunately, a couple of weeks ago at 3.99%. Since then, the best rate that they've got is 4.4%, is increased significantly. And all of the lenders at the moment are putting up rates. You've got Lloyds, you've got Nationwide, they put the rates up 3 times in around 2 weeks. You've got HSBC, you've got Halifax, you've got all the TSB, everyone you can think of, Virgin, they're all putting their rates up. And that's because of 2 things. The swap rate, the money they get at, and also because January was a lot busier. So they had an influx of business. There was a lot of pent-up demand. 2023, banks had 15 to 20% less mortgage applications. January 2024, they had about 20% increase. So the market kind of came back to where it was in 2019. So that means they didn't have to be so competitive. So what does that mean for you as a homeowner or as an investor? Well, what you should be doing right now is looking, when does your mortgage end? If your mortgage ends in the next 6 months, my advice to you would be to go to the bank and fix a rate today. Get an agreement for a rate. You can do that right now. You'll stick on the rate that you've got for the next 6 months. But get a rate agreed today, and then that gets you out of the volatility, because what could happen is mortgage rates, the rate that you borrow at, not the bank's rate, the rate that you get could increase over the next few months. So while we're looking at rates at 4.4% right now, they could creep back up to 5%. But if you agree that rate today, then you've got that whole 6 months window, or that for you could be 3 months, or it could be 2 months, depends on when your deal expires. During that time, if a better rate comes out, you will be able to swap on to that better rate. With a quick fix and some paperwork, you can move on to that better rate, which is good news. But if a worse rate comes out, you're still going to get the rate that you agreed today. So this is what you should be sharing with friends, family, colleagues, letting them know now's the time to fix the rate, get them to watch this video, fix your rate today. Then if a better rate comes out, brilliant, move on to that. But if a worse rate comes out, you're not going to be impacted by that. Now, it looks like inflation is going to keep going down. It's moving in the right direction. But the Bank of England has clearly said that at the end of this year, they think it's going to go back up again. So while we're going to get close to that 2% target, it will be for a short-lived period of time, maybe a few of the summer months. And then at the back end of the year, it might start creeping back up to that 3%, 4% level where we've been for a while. It's not going to start creeping back up. It's less likely, could happen. It's less likely that it's going to go back up to the 11% that we had before. But it's still, the Bank of England's focus is to get rid of inflation. That's their whole strategy, their whole goal. That's all they care about. They don't care how much pain that causes for you. Let me know your thoughts on this. Have you done this? It's really lovely when I see comments where every week I get at least 10 people comment and say, because of this channel, because of watching and learning how this stuff works, they fixed a better rate, they got a better deal, they're tied into something now that protects them going forward. If that's happened to you from watching one of the videos, do comment below and let me know. Do share this video, guys. It really helps the YouTube algorithm, and this video is important to let people know what options they've got. So click that share button. And if you want to learn about property investing, now's a great time to do it. The market is flat. There's people that want to sell at discounted prices. And so we've got a program called the Fundamentals of Property Investing. It helps you find investments. It helps you source them at the right price. It helps you fund investments. It helps you pick the right strategy afterwards. Do you run it as an HMO? Do you run it as a serviced accommodation? All of that's covered, and it's less than 50 quid as a one-off charge. So I'm going to link to that below. So do click on that and join us in the Fundamentals of Property Investing. Do check out all the other content. We've got nearly 700 videos now, including this video right here.